Hello, hello, hello. Welcome back to Bitcoin News Live. Got a great show ahead of us today. Very excited for our guest. He is a technical analysis expert, somebody whose charts you've seen across Twitter for years now, someone that I've learned a lot from. And I think he will give us great insights as to where exactly we are in this cycle. All right, let's get into it. Because earlier this summer, Bitcoin crashed to $59,000 as sailors sold a little bit of Bitcoin and everybody panicked. But today we're back above $65,000 and the mood has completely flipped. Most people are not looking underneath the hood though. The volume underneath this move is thin and it's getting thinner every single week. Prices going up, but the spot buying isn't there to give it that punch. And the level Bitcoin just climbed to is the exact level that past bear markets say should stop it cold. So is this a base forming at the 200-week moving average? Or is this the summer relief rally that shows up right before the worst 2 months of any bear market year? Our guest has been calling this exact setup since June. Today, we ask him what happens next. Rekt Capital, welcome to the show. Sir, thank you so much for joining us.
Great to be here. Thanks so much.
Yeah. Absolutely. As I just said on the intro, I've been watching your charts for years now. I think you give great, no nonsense analysis. You dive in and tell us about technical analysis itself. How do you become an expert at it?
I think really tuning into the psychology of what the price action is doing, green candles being more focused on euphoria, greed, and FOMO, the fear of missing out, and red candles being more focused on pessimism and fear and uncertainty, doubt. And we have price action behave in very certain predictable patterns, and that's because of the predictable irrationality of human emotions cycling in a sinusoidal fashion from fear to greed on and on for as long as necessary. We see entire Bitcoin cycles last over 4 years. We have entire macro wedges developing during that time, but also we have falling wedges developing on the 1 hour chart. So we have these macro emotions and more zoomed in micro emotions. And it's all about trying to read those emotions from the historical transcript of human fear and greed. That is the price action.
And so you've been looking at the charts for over a decade now. How has your experience looking at price charts changed from when you started up until the present?
That's a great question. Before, when I first started, I had no idea what price action was as a concept, what the squigglies in a token mean really, or there was a lot of uncertainty, and what frustrated me was the lack of predictability in what was going on. It just felt like I bought a coin, whether it was Bitcoin or a random altcoin. I just didn't know what was going on with that movement, and that was a bit of a roller coaster ride. So I really became dedicated to understanding if there are any sort of patterns to this madness, any method to the madness, trying to come up with ways to potentially predict these moves. And that's where I started learning about the psychology that's ultimately embedded in the price action of these charts, and trying to slowly understand that psychology. And crypto Twitter didn't really help at that point in time. I think it was very early stages where a lot of the posts were engagement based, that were going to the moon, or it's gonna just go all to zero, down, doom and gloom. And for me, I just wanted to become this weatherman for price action because that's somebody I needed myself. So I wanted to become the change I wanted to see in the world, so to speak, as the quote goes, and share my journey of trying to understand price through the lens of human emotion, but not necessarily experiencing that emotion, as most investors tend to fall into that trap. I certainly was one of those people. Rekt Capital, means a certain thing, that I did wreck my capital in the very beginning. But nowadays, Rekt Capital means something else, I hope, and that's a data-driven approach to market cycles, understanding the psychology with these repeatable, systematic movements in price, and just trying to understand that psychology a little bit more. So that's what I resolved to do 10 years ago, almost at this point, and it's been quite a journey.
Yeah, man, it is a psychological game, and it seems as if markets are made to do the opposite of what everyone expects. right? Why is that? Why do you think that markets are made to separate the most amount of people from the most amount of money?
That's a great question. I think we're hardwired in a certain way, and we'll always like novel things, for example. And so, if there's a new altcoin that's promising and promises the moon, that's always going to be quite enticing. And so, that's just something that's embedded in us as a species. But there are also other things where, good news feels nice. We like to see price go up, and that's a dopamine hit for us. And it can get also quite addictive. There's certain neurochemical reactions going on inside the brain whenever we see the price action go up. Whether that's the very end of a uptrend, that's not something we can identify just by emotion. We'll just want to buy that coin because we can see it's going up and up and up. And so there is an element of price action. Every phase of price action tries to tease out a certain emotional response in us. For example, right now during the summer range, that response up until recently, that was more like impatience, boredom. Around the halving period, there's a lot of excitement and encouragement that we're going to see the blockchain protocol suddenly get fundamentally shifted, and people are going to expect great returns shortly after that halving event. But what happens in and around the halving event is, you know, despondency. We are disappointed. We're discouraged by the lack of price action going to the upside, because around the halving period, we see Bitcoin's price action just go sideways for many, many months. So every phase in a cycle elicits a different response based on what price is trying to do, and the market will find a way. Whether your sticking point is impatience, it'll make you jump in and make a knee-jerk reaction and maybe the wrong decision from an investing standpoint, or whether it's boredom, you need to always trade something that will make you overtrade. So it's all about trying to understand your kind of blind spots, and try and become a little bit more systematic about bringing up those weaknesses, and of course playing to your strengths. If you're somebody who works well with, you're patient, for example, I think that's a really vital component to becoming a good long-term investor. And if you're not scared by months and months of red candles for Bitcoin, for example, in a bear market, you might actually treat that as a discount, and think that, well, I think over the next year or two, Bitcoin will actually go on a tear to the upside. So there are certain qualities that can work to your detriment, and there are certain qualities also that can actually help you in this space. And I think it's about channeling into those more positive ones and just slightly adjusting, fixing the ones that get you into trouble.
And it's funny because, I mean, I'm a Bitcoin investor, right? And so I'm not trading this asset, but I'm still looking at the chart on a daily basis, right? And I'm trying to
Mm.
figure it out and feel the momentum, know when to psychologically put up my defenses and brace for more downside, or when to get optimistic and say, this thing is going up. How does trading or looking at the Bitcoin chart differ from, say, the regular stock market, S&P 500, or any other major index?
I think Bitcoin's very different from a volatility perspective, of course. Maybe that's going to be changing as we see the asset class mature. Um, there are certain repeatable phases in the Bitcoin market cycle that make it a little bit more just easier to trade or invest in. For somebody who's been looking at the charts daily, like yourself, for years now, there are repeatable things going on a regular basis, and sometimes tech stocks will have that, for example, but ultimately, whether it's metals, tech stocks, those cycles can take a little bit longer of a time. And so we can see, for example, reaccumulation ranges for Bitcoin break out within a handful of months, whereas for gold, for example, that could actually mean years. So it comes down to that volatility, predictability, and certain phases just being a little bit shorter for Bitcoin versus other assets.
All right, so let's start looking at some charts. I'd love to get your opinion. I mean, this is Bitcoin on the weekly going back to 2019. If you didn't have a name on this chart, what's your first feeling when you see something like this, knowing that this is a 6-year time span?
Well, great question. I think we have major periods of upside. Just kind of, this is always how I approach a chart, really reducing it to core principles, to absolute basics, and then working your way through into more complicated territory. One of the best things you can do with a price chart for Bitcoin is just understand where the halving events are, because the halving event is a mirror for Bitcoin's price action, and it sets the tone for the cycle, really. And what's interesting about the halving event is that it occurs every 4 years, of course, but we see bear market bottoms roughly 500 days before the halving event, and we see bull market peaks roughly 500 days after the halving event, which gives us a 1,000-day cycle overall from bear market bottom to bull market peak. And obviously, it's not 1,000 days exactly. It can be 1,066 days, for example, like we saw in the previous cycle. But generally, the halving as a signpost is a really useful reference point. And then from there, you can see that post halving, we tend to see these massive exponential rallies to new all-time highs, and of course we see pullbacks in between. And then after that collection of exuberant advances post halving, 500 days after the halving, we tend to start to falter and fail to make those new highs. And just looking at these kind of two collections of highs at the bull market, peaks in 2025 and 2021, you can see higher highs, for example. And at some point, those high highs, in the context of RSI indicators, for example, which show lower highs, that's a mounting bearish divergence. So just kind of under the hood of price action, showcasing signs of progressive weakening in the price action. And then inevitably, we go into a year-long bear market. And we've seen bear markets last minimum a year. Sometimes they go on longer. But those are the fundamental principles. And I don't know if you'll remember, but in the bull market, we had a lot of talk about a lengthened cycle, and that would have been very anti 4 year cycle. And I was always talking about how we're probably not going to really deviate from 4 year cycle tendencies because they've been playing out so well. I think until proven otherwise, it's probably worth following them. And I still believe that in this bear market as well. So lengthening cycles, where did that idea come from? We do see some lengthening by 30 days or so across cycle to cycle. That's true. We can't really ignore that. But everybody wants the summer to go on for longer, right? Nobody wants a great party to end. So we want the bull market to continue a little bit longer. And at the same time, we want a bear market to end sooner. Nobody wants winter to go on for too long. So these are emotional responses. And when people talk about these sort of assumptions of lengthening cycles or shortening bear cycles or shallowing bear cycles, that's another one. We don't want price to drop too much because that price dropping is pretty painful. But at the same time, we do see shallowing bear cycles, but not to the extent that people want that shallowing to be. So, for example, we see bear cycle shallowing by 7 to 10% across cycle. But if people are saying that we've bottomed in June, or whenever that was, I think it was in June, then that would assume that we've seen a drastic shallowing of 25%. So these assumptions, shallowing is correct in terms of bear cycles, but we need to really question critically those assumptions, because while shallowing is a correct assumption to have, that shallowing can't be drastic to the point of being, we saw a bear cycle retracement of 77% in the previous 2022 bear market, but now having a bear cycle retracement that's 25% shallower, that's a little bit too drastic. So it's these sort of assumptions that we need to critically question, because on the surface they might be correct, but really diving into them a little bit deeper and more critically, we can learn that these assumptions may not have legs.
It's so funny how the dates line up so well, right? I mean, it's absolutely insane how like this area here on the chart lines up so well with this area, right? And the fact that we are mimicking this 2022 bear market so well it's hard to believe, but that's where we're at. And that's why many people are still calling for a lower low come the fall. So before we get to that, were you confident when we hit 126 and went down that was the peak, or did you think that we might still rally into the end of 25?
So I have a few tweets about that where I mentioned the halving theory, so that we tend to peak 500 days after the halving. And I just juxtapose cycles. If we were to repeat 2018 tendencies or 2017 tendencies, we'd peak 518 days after the halving. If we were to repeat 2021 tendencies, we'd peak 550 days after the halving. So that gives us a range of 518 to 550 days after the halving. In 2025, that gives us mid-September to mid-October. So that was the kind of vertical bar I put there. That was a general idea based on historical halving cycles, and we topped out in early October. So I can share that tweet with you if you'd like it later on. But that's effectively what happened. So I did feel like we'd be following the cycles. Lengthening cycles were a popular narrative at that time. So it's not necessarily that we lack information about Fourier cycles. It's the emotional thing that happens at those bull market extremes. We want to see price go higher. We want to believe in lengthening cycles. And there were loads of narratives about global liquidity being, climbing at that point in time. I also tweeted about global liquidity, and the tendencies we see is Bitcoin tends to peak and global liquidity continues to climb for 4 to 6 months after a Bitcoin bull market peak. And I tweeted that in July of 2025, and we saw global liquidity decorrelate from Bitcoin, but because inevitably that happens. And I know a big narrative was that global liquidity is inclining and Bitcoin's price is following global liquidity. That continues, of course, that continues for a fair part of the bull market. But then a decorrelation takes place, and that can be quite troublesome for investors when we finally do peak in a Bitcoin bull market.
Yeah, that global liquidity chart tracking with Bitcoin and the divergence, that was such a popular chart to be going around Twitter the last year, but we didn't catch up. So the bear market is here, absolutely, despite global liquidity going so high. So let's dive into some of the tweets that you sent over, because you build the case. We go back to November of last year. And what did you see at that time?
Yeah, so when you asked me about what I saw with at the chart, we already saw this in November, that 2021 was building a macro triangle and was probably going to look very similar in 2025 as a fractal. So in November, price was already developing this macro triangle, and we tend to see these macro descending triangles even dating back to prior cycles. But in this particular tweet in November, we reached 82.5K. Typically, we tend to reach that base. The analog of that was in 2021, where we rebounded from. But we have that horizontal act as a weakening support. So in 2025 November, I mentioned how we'd be rebounding from this macro triangle base into the macro downtrend, because that's what happened in 2021. And at this time, that's where we were preparing for price stability at the base. And if we move on to the next tweet, to the next post, we can see here that we indeed rebounded from the bottom of that macro triangle base into the macro downtrend. But because of the principles of the base simply weakening over time, I think even in this chart, the rebound hadn't even taken place. Maybe that's going to be in the next chart. But the whole idea here is that we see weakening rebounds from that base of the macro triangle, and inevitably we break down from there. So that macro triangle base facilitates a relief rally, goes into a macro downtrend, and then we reject and break down from that triangle. And maybe we'll actually see the post later on in the collection of tweets, because we indeed did see that rally into roughly, I think it was roughly 100K or so.
And so let's go back to that time period, right? So this was, we hit 126 on October 6th, and then we had, of course, 1010 happen, right? And there was this huge leverage wipeout across the entire crypto space, and people have been like trying to point fingers as to who's to blame for this ever since then. But in terms of just the overall bull market and that being the end of it, did that 126? I mean, you had the timing right. You said mid-September to mid-October, but did that height in terms of price surprise you? Did you think that we'd be higher, or was 126 well within your range?
Well, on Twitter, I posted about a trend line, a high trend line that if we apply it to, can't remember what that first peak was in that 2025 cycle, but we have a higher high, right? And if we draw that higher high trend line, then that becomes the ceiling for price. And while I didn't know exactly that 126 or whatever that price point was going to be the absolute peak, what I did post was that if we break this trend line, we'll enter price discovery, we'll start to explore higher levels. But if we can't breach this trend line, that's going to be the ceiling for this cycle. And we weren't able to breach that ceiling, and that's going to be a ceiling to revisit in the future bull market. So from a technical standpoint, we had that higher high resistance. We had lower highs in the RSI, so a macro bearish divergence, but that continued since 2024. So you couldn't really utilize that in a perfect timing. But what I would say is that we had the predicament of weakness. We had the halving timing, as you mentioned, that around September to October, we tend to peak. We had that weakness, and as is the case in bull market peaks, market extremes in general, bear market bottoms as well, we tend to see black swan events. We tend to see these major catalysts take place. So 2025, like you mentioned, we had the major liquidation event for crypto. 2021, we saw Elon Musk take Bitcoin off the Tesla balance sheet after an entire prolonged bull cycle of confidence in Bitcoin. And conversely, the Bitcoin bear market bottom of 2022, we had the FTX collapse. And prior to that, we also had other catalysts at those market extremes. 2017 bull market peak, we had the CBOE launch, which was a great catalyst, but then we went into a bear market. So every market extreme effectively has these black swan in quote unquote. Because the black swan suggests that they happen relatively rarely, but when they do happen, they have outsized results or outsized impact on the market. But the thing about these black swan events is that they roughly happen, at the bear market bottom and the bull market peak. So there is a regularity to those extreme events. And it's just interesting how they tend to happen at every bull market peak and bear market bottom.
And what's funny, I mean, those are the two most dramatic events in any cycle. And I mean, the bull market peak and bear market bottom are usually within a year of each other, right? So these these final years of the cycle are definitely a doozy on both ways, for sure. Cool. Let's keep going. So this is from February.
Yeah, whenever we break down from these macro triangles, we always drop into the 15-month EMA and we rebound from there. And back here in February, we were talking about how that probably we'd see history repeat effectively. That's what my chart analysis relies on, is on these historically recurring tendencies and the predictable irrationality of price action. And in February, we were talking about how a relief from the 50-month EMA would probably take place. It would be short-lived. It would fall short of the green 21-month EMA. And over time, we'd be breaking down into that red boxed region below the 50-month EMA and turning that purple 50-month EMA into a new resistance. But before we even got below the 50 EMA, we saw that entire macro relief rally take place back to the base of the macro triangle, which was 82.5K. But even before that breakdown took place, we can see that upside wick into the 90s. That was that relief rally that we spoke about earlier here in the episode, where that relief rally went into the macro downtrend and we broke down from there. I think it will be clearer in one of the next charts where we have the macro triangle perspective again. But we just, 2021 and 2025, it's a very closely related fractal, and it's been so closely related that it's sometimes, it never ceases to amaze me.
It's spooky. let's talk about the EMAs. How useful are they in your analysis? And if people are to use them themselves, where should they start?
Yeah, I mean, these are macro EMAs, macro exponential moving averages. The 21-month EMA is the green one, and the purple one is the 50-month EMA. Just putting these on the chart and understanding, monitoring, looking for how price action reacts to them relative to the halving. So if we're in a bull market, we'll treat both of these as support, and we'll actually deviate to the upside away from them. And in bear markets, we'll lose them as support, and in fact, we'll turn them into resistance. And that's happened. We can see that happen in each of these bear cycles. They act as support, but the support is certainly weakening, and then we break down, turn them into resistance, and that happens over and over in every cycle. So if there's just one takeaway, EMAs support in bull cycles, EMAs lose support and turn into resistance in bear cycles.
Some of my favorite technical analysis posters on Twitter, Ben Cowan, Caleb Franzen. Do you know Caleb? Have you seen his
I don't
work?
know Caleb. I know of Ben though.
Yeah, I mean Ben's big time. Caleb's great. I think you'd really enjoy his work. Check him out, Caleb Franzen. But Caleb definitely said that when we lost this level here, he's like, okay, bear market's here. You can deny it all you want, but bear market is definitely we've begun it, and it's hard because the psychology wants you to believe that, hey, no, we're gonna bounce and we're fine, but it's very clear that once you lose this 21 month right EMA, it's hard to recover. It really is the end of the bull market, because the bull market just rides this thing up, right, and it's support on the way up.
Exactly. They're bull market EMAs after all,
Yeah.
and they act as support in bull markets. And when we lose them, uh, you need to be really removed from the charts emotionally. I know it's difficult because there is some emotional investment that goes along with the financial investment, but it's really important to just know from a kind of calm, collected standpoint that if the data is saying that, well, we're actually losing these bull market EMAs, like you mentioned, Caleb said, then that's what's happening, and we need to try and predict that ahead of time and prepare for that scenario, because inevitably it occurs in every bear cycle.
Mhm. And so then you have this red box here, and funnily enough, it's been what, 5+ months since this tweet was put out, but we still haven't gone to the bottom of this red box, right? We really haven't gone much below the top of it, right? So what does this red box mean? How did you derive it?
I mean, this red box is representing a phase, and this phase, is as recurring as losing the 21-month EMA. Losing the 50 EMA is also a recurring phase from cycle to cycle. We simply tend to perform downside deviations below this 50-month EMA, and those downside deviations have historically marked out general bear market clusters for Bitcoin's price action.
There you have it. Yeah, I hear you use that a lot. Price clusters.
Yeah, those are because this is the monthly chart, so each candle represents 1 month's worth of price action, and we can, like in 2022 here, we see a 3-month summer range develop, June, July, August, and then in September we falter in 2022, and so these are clusters that are representing a summer range, a range of redistribution, and then from there, a price often tends to make an additional leg to the downside. So clusters represent certain structures, uh, and in a phase, and in this sub 50-month EMA phase, we tend to see two major clusters oftentimes. One is that summer range cluster, and the other is that final bear market bottoming out cluster.
The final flush. All right, let's continue our journey here. Now, the May relief rally arrives on cue.
That's right. I mean, that's where we rebounded from the 50-month EMA. Very 2022-esque in the sense of rebounding from the 50-month EMA. But in this cycle, we really saw a prolonged rally take place from there. It took a long time. So another cluster developed above the 50 EMA. 2022, we only saw price maintain a month's worth of price action before breaking down. But in this cycle, we saw months and months of this price action take place. But what's really fascinating is that if we were to measure the rebound in 2022 from the 50-month EMA, that's roughly 22% or so. And if we measure the rebound magnitude from the 50 EMA in this cycle, that's also 20% or so. So we get the same magnitude of relief rally in 2022 and 2025. It's just that it took time, a lot longer of a time in this cycle. But the results were the same, that we pretty much rebounded 20% or so, and that we effectively lose the 50-month EMA, because what's that relief rally all about? It's to show us that the 50-month EMA is weakening as a point of support. It produces a limited relief rally, and then we dissipate and break down from the lows. And that's what tends to happen in every cycle.
Yeah, I remember this segment here it correlates with I believe Terra Luna blow up, right? I think that's what brought us
Yeah,
down
I think
here.
so.
That was a brutal I think in June, May or June of 22. Still remember it like it was yesterday. Because the funny thing with these markets is that it strokes your psychological ego, right? Like you feel smart when you're right and it's on the way up and you feel invincible, and then black swans happen and you are taken down a notch. So it's such a funny psychological game we play here.
That's true. That's true. You can't really anticipate these black swans, but if you look at the EMAs and how price behaves with them, the EMAs, the TA effectively can give us an inkling of what could be coming next. And while we can't anticipate the news or the narrative or the black swan catalyst, we could put ourselves in a position to anticipate that something will trigger that additional downside over time.
All right, at this juncture, I have to ask you the question. They always say TA, technical analysis, is astrology for men. What do you say to that?
I think I think TA and FA are two sides of the same coin. One informs the other, and when it comes to TA specifically outlining the predictable rationality of price action using patterns, charts, and volume and all these different indicators, I think TA can be misused. I think you have to be really well versed in not just patterns and indicators, but really well versed in the absolute core principles behind those metrics, and really understand the psychology of what the price action is doing. Because sometimes you can draw a falling wedge, which is a bullish pattern, but we'll see price breakdown from there. But it's not about drawing a falling wedge. It's about understanding where we are in the market cycle. Are we oversold? Are we, declining on sell side volume? Are we on the cusp of seller exhaustion, where we've seen a massive seller volume bar breakout, which makes bullish price action a little bit more easier to appear? And so it's these sort of things that TA can be really advanced. And I think we often hear that TA is astrology for men, and maybe on a surface level it can be, but if you really understand it, it's a very powerful tool. And understanding TA is understanding psychology. So I wouldn't say psychology is astrology for men, because really TA is all about psychology and the repeatability of it,
Yeah.
and using graphical representation to try and understand and harness that psychology.
It's pattern recognition, right? And you are obviously amazing at pattern recognition. Is it a skill that you always had, or did you develop it by just staring at charts?
Yeah, I have to say I don't know how to answer that question,
Mm,
because I think we're all meaning-seeking creatures, looking for patterns, looking for predictability in our day-to-day routines. We sometimes are on autopilot and brush our teeth in an automated way. We don't really think about it. And so I think it's part of human efficiency to try and make things in our life a little bit easier for us. There are always going to be more cognitively effortful things that we need to focus on and can't quite automate. But whatever we can make a little bit more habitual and routine, we'll try to do that. And so looking at the price action, you can see certain emotions repeat on and on. And that's because we want to, on an emotional level, and invest in Bitcoin. And a lot of at certain phases, we all have instinctively the same idea to buy before the halving, for example, because we're going to see price explode, but then we get disappointed and impatient, and then we might actually sell Bitcoin because it's not really doing anything for months and months, and then we see the explosion many months post halving. So I think it's just this sort of looking for meaning in the price action, looking for meaning also in life, which is a kind of a bigger question. But if we do seek out those answers, we can actually find out some really interesting things. And for price or charts specifically, having these sort of macro descending triangles, for example, and they play out as well with pretty much striking accuracy. It's phenomenal how that psychology always repeats itself, and it will continue probably to repeat itself in a very closely related manner as well.
The cycles repeat because humans are predictable. And here we are over to June, coming up to more recent times. And you laid out a summer game plan. What's the game plan?
Very, very simplistically put, the game plan is whatever June does, July will do the opposite. So across cycles, we see that June tends to be a signpost for the summer. And oftentimes we'll see if June is green, July will be the counter trend month and vice versa. So in this cycle, we're seeing, or we saw at that time, that June was red and that we'd probably see a green July. So June as a signpost informs July because July always does its own thing. July is like the rebellious child in the collection of children in the summer, so to speak. So if June is one child, July is one child, and August is the third, June is going to be the one that sets the tone for July, which is going to be a little bit more rebellious, doing the other thing, and August is going to be canceling out the upside from July. So June, July, August have very specific roles in their cycle, and in this cycle specifically, July tends to cancel out or at least July will see a green month, and August will cancel that upside out.
Yeah, we see it here. And it's the coupling of August and September in bear market years that's pretty scary, right? You see it
That's right.
28 or 2022 here, 2018 and 2019. And yeah, you're right. I mean, and June and July are opposite, except it seems during raging bull markets, right? I mean, last
Yeah,
year.
I think that's a different kind of thing because what I focus on in my analysis is looking at the bear market, like you mentioned here with August and September. What happens in bear markets? Because I mean, if we're in a bear market, looking at what tends to happen in the bull market, June, July, it won't really serve us, will serve the purpose of helping us. But in bear markets, indeed, we tend to see that tendency take place. August cancels out July relief, and like you mentioned, quite aptly, September tends to be the downside continuation month on August. So whatever downside August performs, September tries to stretch that into additional downside continuation, and sometimes that can lead to a range breakdown. So if we're seeing a summer range develop June, July, August, then August will really give us an idea of, are we going to be breaking down from the summer range? And September would probably kick that breakdown off. But if August, for example, eclipses the June lows and July lows, then maybe we start to see that breakdown in August, and September pulls price down even lower, already outside of the range. So that's kind of a few ways to think about what the coming summer range could look like.
And I mean, on Twitter, being a bull is makes you more friends, but I mean, being right is the most important thing. How do you deal with people who get upset at you when you say, "Hey, look out for August, September. It could be rocky road ahead."
I think many people appreciate the just sharing level-headed insights, data-driven insights about what the market is doing. I think that's more helpful for people than not having integrity and saying that we'll be rallying if we don't really have much weakness. I love being a bull, and I've been a bull many times, and I will be a bull once again in the future. I can promise you that, and promise everyone here as well. But I think in the meantime, we do need to follow the charts. Ultimately, we're still in the bear market. We're seeing weakening rebounds from 60K support. So every rebound we've seen since 2024 has been progressively weak, getting weaker. And really, I just share these insights in as unbiased a manner as possible. And I just share what the recurring tendency in historical cycles is at this moment in the cycle. So I'll be sharing those historical tendencies to give an idea of what could price potentially do later on. And it's certainly my goal is to share analysis as it is, to share the price predicament as it is, because that can be quite helpful. It can help you avoid losing money, and it can also help you make money to achieve your your dreams, by your mama cow, or whatever the case may be. And if I can help people achieve their goals and help them avoid many of the mistakes that I made in the beginning of my journey when I had no framework around it and just emotionally invested all the time, then that's what I'm happy about. But it can be quite difficult when I say that we're probably going to be pulling back, because that's what cycles say. There can be quite a lot of negativity, especially when we see strong rallies to the upside, especially at market extremes, which are in uptrends. So bull market tops, uh, uptrend relief rallies. That's when people really want price to go up, and that's typically when the voices are most vocal and also negative. So I just don't look at my comments during that time. I just post a tweet, and this is what I think. This is what cycles are suggesting, and in your best interest, really. So I want to have that integrity, and always share how things could potentially play out. Oftentimes they do, and that's not really uh, me being accurate. I'm just uh, saying what the cycles tend to do, and kind of sticking with that. So if that's accuracy or just being faithful to the cycles repeating, that's up to the audience to decide.
Yeah. And here at Bitcoin News, of course, we focus strictly on Bitcoin, but I know you also do analysis on altcoins, and there's been calls for a altcoin summer or the rebirth of altcoins, but it just hasn't happened. These things are just getting beaten down and beaten down. We won't spend much time on altcoins, but I just want to get your general opinion. Do you think that there's going to be a resurgence in the altcoin side, or are these things permanently down now?
It's a tough one, because we used to have such great correlation between the altcoin market and Bitcoin, and that correlation has weakened with adoption and institutional interest in the more higher market cap assets, Bitcoin, Ethereum, Solana. So it is a bit. It's a tricky position for more prospective assets like altcoins. I think over time, altcoins are going to continue to suffer and lose valuation. We tend to see whatever Bitcoin retraces in a bear cycle, altcoins will also retrace, but even more so. So while this is a relief rally for Bitcoin, altcoins might also see some relief, but that's going to probably dissipate, maybe even in this August, and we're probably going to continue to decline in both valuations of these asset classes. And the thing about altcoins is that they tend to bottom in the bear market many months after Bitcoin. So many people think that if Bitcoin bottoms, it's a great time to buy altcoins, and that's a common pitfall, because even when Bitcoin bottoms and moves sideways and then develops higher lows during this time, altcoins can continue to dwindle and lose valuation. So there's a very unique time that it's worth getting into altcoins, and that really, it's becoming a tougher game to play as the cycles are going on, and probably for the vast majority of the cycle, it's probably a bad time to be holding altcoins. Before, you could be buying altcoins and holding them for the cycle, the entire Bitcoin cycle, and they do really well. Nowadays, you have to be very conscious of which altcoin you choose, when you choose it, and never hold it for too long. You effectively have to swing trade it on a multi-month time frame to make the most of the cycle, because inevitably every altcoin pulls back 90% plus in each bear cycle.
Yeah, and at the end of the day, everything bleeds to Bitcoin. And here at Bitcoin News, we say friends don't let friends altcoin. So I mean, just look at ETH here. You know, the ETH BTC ratio back in 2021 at the peak, it was 8 million, 8.5 million sats per ETH. Now it's 2.9 million sats per ETH. This is just whenever Bitcoin would go down, I would just look at this chart, and as long as this chart was also going down, I still felt good. But now it's gotten to the point where poor ETH community, I mean, this thing, they said they were going to flip Bitcoin. I don't think so. I don't think so. So do you have any comments on the ETH BTC chart?
I think that flipping narrative, that tends to happen at those cycle highs. It's euphoria. It's the final phases of the ETH BTC uptrend at that point in time. And whenever that happens, that's a pretty clear emotional cue from the market that there's a lot more excitement than there is basis for that scenario taking place. And it was the same thing with Solana and Ethereum. It's the same with any so-called Ethereum killer in a bull market, whether it was Cardano once upon a time, whether it's Solana once upon a time. And the flipping ideas always come out at some moment in the cycle. So I think the flipping thing will once again appear in the future bull market. It's just really important to be cautious of it and what it really means.
That's a great indicator, the flipping indicator. Watch out when you hear that. Getting a little too ahead of your skis when you hear that. Well, let's continue on. Let's get through your charts here. So that's June, and now fast forward July. We're right here.
Yeah,
this is where we're at.
Here we are. Yeah, we got that June red monthly close. Wherever June marked out its bottom, we'd see a green July. And that green July serves the purpose of turning the 50-month EMA into a new resistance. That's typically what tends to happen. We saw that happen in 2022. We even saw that happen in 2018. It's just that in 2018, we saw a very small relief rally from the 50-month EMA. We then broke down and turned it into resistance. It's just that we built out that bottom beneath the 50-month EMA. We were turning it into the EMA into resistance while developing a bottom. But in 2022, we developed a redistribution summer range before breaking down into the bottom. And in this cycle, we still have time to go into the bear market bottom and explore a bit more additional downside in terms of magnitude of retracement. But what really at a high level is going on here is that any deeper downside deviation below the purple 50-month EMA is an outsized bargain opportunity for the long term. So really important not to practice the ostrich effect where we hide our heads in the sand during this difficult moment, although really it's green July, it's not really that difficult. But when August comes around and we probably see that downside, really important not to shy away from the markets, because the next few months, as we do look for that bear market bottom period, being in the market, being active and looking at the charts and following the analysis, I think that's going to be one of the best time investment decisions you can make, because by taking the right actions, making the right decisions in that really important moment, that will set your portfolio up for the next 3 years worth of upside in the upcoming Bitcoin bull market. So really crucially important time, and we're slowly slowly approaching that bear market bottom, but we're not quite there yet.
We're not quite there yet. And I do want to end this conversation on a bullish note, looking forward, what you expect in the next cycle, and why we should still believe in Bitcoin despite these summer doldrums. But before we get there, we got to give a shout out to our sponsor of this show, Rhino Bitcoin. Previously, getting access to Bitcoin financial services was slow, clunky, scattered across all these different platforms. But Rhino is changing that. Rhino is a next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. Buy Bitcoin with zero fees, more sats for every dollar you spend. Make payments over the Lightning Network instantly and also near zero fees. Send cash globally, fast and easy over Bitcoin rails. Set up automatic savings, DCA, so you can stack sats on your schedule and build wealth over time. Soon you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement all within Rhino. This is going to be your one-stop shop for your Bitcoin financial needs. Of course, security is of the utmost importance, biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never, ever rehypothecated. Download Rhino today. Go to rhinobitcoin.com. Download the link below in the description, and you can get it, of course, for iOS and Apple. Use code Bitcoin News, one word Bitcoin News, and Rhino will drop you $10 in free Bitcoin into your account just for getting started. Rhino is an awesome team. They're building one of the best apps in Bitcoin. Check it out today and get that $10 worth of Bitcoin. You have no idea how much that's going to be worth in the future. Thank you to Rhino. All right, Rekt. So let's get into it in terms of the final flush here. You expect one more leg down, correct?
That's right, yeah. One more leg down, below the summer range, of course, because the June lows, July lows, August will probably bring price back to those lows. I made I posted a tweet about how, we were in July or in June, that we'd probably get back to the same prices we were in June in August. So there's nothing really to worry about in terms of sustained upside. And so we're probably going to be back at that June low in August, probably later in August. The second half of August tends to be the most bearish. So July tends to do the opposite to June, but the first half of July it's where July tends to build up a bit, pull back a bit, but then the second half of July tends to be more bullish. That's exactly what we're seeing again here. And August, for example, we tend to see August, the momentum try to still be there, but we kind of top out over time. And then the second half of August sees most of that downside continuation. So once we've broken down from that summer range, that's when we'll see that final major a portion of bearish acceleration to the downside into that final bear market bottoming out cluster.
But don't get too bearish because that's the best time to invest, right? That's the best time to get a lot, increase your stack so that you are set up for the bull market ahead. Let's talk about the next bull market. Do you believe in diminishing returns? Do you have any targets for 2028 or so? What are we looking at over the next 2-3 years?
I do believe in diminishing returns, and I believe in that principle because it's what happens in each cycle. Every bull market has produced lesser and lesser returns, but by the same token, every bear market has produced lesser and lesser corrective, really less shallower bear market retracements over time. So that's kind of part and parcel as we mature in this asset class. But in terms of targets for 2028, I think that's the halving year. If we break down the roadmap in terms of 4-year cycles, this is candle 2, so the bear market year. Candle 3 is the bottoming out year, and that's when we break out into a new macro uptrend for Bitcoin. And we tend to revisit or try and get as close as possible to the 4-year cycle 3 resistance, which is quite a mouthful, but effectively what that translates into for next year, which is the bottoming out year, we could rally to as high as 93K. We'll try to get there, but we could fall short, a little short of that level. But then in the halving year of 2028, that's when there's a pretty good chance of trying to go for new all-time highs again. Whether that's going to happen in the pre-halving period, post-halving period, I think, we rallied to new all-time highs in the pre-halving period for the first time ever because we had that double catalyst in the ETF launches and the halving itself. I don't know if we'll ever be able to replicate that double catalyst thing in the future cycle. So we've always rallied to new all-time highs in the post-halving period of the halving year. So 2028, probably new all-time highs. I'm not quite sure whether that's going to be the pre-halving period again. I think we might revert again to post-halving new all-time highs, but that's kind of a small detail I'm thinking about. So yeah, for the halving year 2028, probably new all-time highs.
Well, I think what you just surprised me with is you don't think we'll see 100K in 2027?
I think that's going to be a pretty dominant narrative. And if we look at these bottoming out candles, so 12-month candles bottoming out year, like 2023 or 2019, we tend to fall short of these psychological regions. And we tend to reject from the 3-year resistances. So that's 93K in this cycle.
Wow.
93K is 7K away from 100K. So we could see some sort of upside wicking. It's just that upside wicking has never really been much of a feature in a bottoming out year. And really, we're kind of splitting hairs, to be honest here, because 93K and 100K, that's pretty much 100K, really.
Yeah.
Plus, I think with 3-year resistances, and any resistance really, you have to always try and front run that and be less greedy than the other person. Most people will be really, really greedy to try and get as much of a bigger bang out of their buck and sell at resistance or try and capture the wick beyond resistance. Whereas I think being a little bit more conservative goes a long way. And so if 93K is that target for 2027, well, when we get into 80K and the higher 80s, for example, we need to ask ourselves, how could this rally fail? How could the market trick me in a way that I won't be able to sell at a good price and hopefully also not round trip any gains on the pullback, but of course depends on your horizon. But nonetheless, there are certain tendencies that tend to repeat, and I think it's worth watching out for those tendencies in specific years. So whether it's the halving year, the bottoming out year, the bear market year, each year has its own phases and tendencies, and if you just follow them, I think you'll be fine.
And so when we look at the past comparisons, so 2027, you think will mimic this area, right? And this one here, is that what we're talking about?
So that area you showed first, the 2023 reaccumulation period around the 50-month EMA. Like we mentioned in this bear market, we tend to break down from the 50-month EMA and turn it into resistance. A key part of confirming a new macro uptrend is actually flipping the 50-month EMA into new support. And what we see there, building a base from that EMA, that's a really good signal. If we're building a base at that level, holding support at the 50-month EMA, we're probably, in all likelihood, flipping bullish.
Well, there you go. All right, Rekt, before we go, I got to ask you a little bit of a personal question about your profile picture. It is the thumbs up from Terminator 2, correct? As
Yeah.
Arnold Schwarzenegger gets lowered into the melting iron. What's the story behind that?
I love that question because, like I mentioned at the beginning of the episode here, when I first started, I did wrecked my capital. I did lose money trading altcoins and making bad decisions. So my hope for Rekt Capital was always for that initial definition not to plague me throughout my whole career. I wanted Rekt Capital to become something else at the end, and what I hope it's become is data-driven, cutting-edge, level-headed insights on Bitcoin and altcoins. But in the very beginning, I did wreck my capital, and it was tough, but I knew that it was worth still sticking around and following Bitcoin. And even though I was in loss on these altcoins and everything, there was fire everywhere, and it didn't really feel good to be underwater. And I still felt Bitcoin was going to be a key part in the future, or at least in play some small but significant role in the future. So it was, I was underwater. There was fire everywhere. It didn't feel very good, but thumbs up. It was. I felt positive for the future, and so maybe a lot of people might be feeling the same thing in this bear market. And so we I think on some level we're all Rekt Capital in a bear market, and I think it'll be fine in the end, no matter how bad it gets.
Well, there you have it. I really appreciate this hour you spent with us. You have so much knowledge. You know the charts like the back of your hand, and you dispassionately, logically lay it all out there, and you can help guide people through these summer doldrums, the final flush, whatever may happen in the not too distant future. But as you just said, I think Bitcoin's got a bright future. I think you agree. If people want to find more about you, your work, your newsletter, where should they go?
They can go to Twitter, so Rekt Capital on Twitter. I'm also on YouTube, so Rekt Capital on YouTube. And if you want to follow my insights on a weekly basis, I write a newsletter, Rekt Capital newsletter. That's found at newsletter.rektcapital.co.uk.
All right, everybody, thank you so much for tuning in. We are live every Wednesday morning. Be sure to tune in on X, YouTube, even LinkedIn. Share this, hit the repost button, subscribe on YouTube, follow along. We are putting out content on a daily basis over there on YouTube, really building it out. And we think you'll learn something if you check it. So thank you so much. We will be back a week from now live. Once again, Rekt Capital, check him out. This man knows his stuff. What a pleasure. Thank you for coming on.
Thanks so much for having me. It was